Hey crypto friends, for those of you who are new to my channel, my name is Garrett and welcome to Altcoin Radar. Today guys, we're going to talk about the Fibonacci retracement indicator that many people use while trading the financial markets, okay guys? And I'm going to show you how to use it to your advantage as well, all right? So guys, before we actually go ahead and get started, if you are interested in trading and you would like to try the same exchange that I use on a regular basis, then feel free to go ahead and try out the MEXC crypto exchange, you guys. You can find a link to it in the description below this video. I love this exchange. It's an awesome exchange to use. The number one reason why I love using it is because I'm a long-term altcoin holder, and I love having a bunch of different small cap altcoins to trade or purchase and hold for the long term. And MEXC has over 1,400 different altcoins to buy at any given time, you guys. So that is the main reason why I personally love MEXC. They've got all kinds of small cap coins, you guys. And of course, obviously, they've got crypto futures trading. So there's that too. All right, guys. So as far as this Fibonacci stuff is concerned, we're going to go ahead and talk about this. So guys, to understand what Fibonacci retracement actually is, you'll need to learn about the Fibonacci sequence first, okay? So basically, you guys, without getting too technical here, because I know a lot of you guys that watch my channel are beginners, so I try not to get too technical into things, because I was there once too, and I do remember that, techie type things or technical type things, technical terms and stuff like that, they get kind of confusing after a while. So basically, you guys, without getting too technical here, the Fibonacci retracement meaning is derived from the following series of numbers. We've got 0, we've got 1, 1, we've got 2, we've got 3, we've got 5, we've got 8, we've got 13, we've got 21, we've got 34, we've got 55, etc., etc. It moves on and on, you guys. And I know this might sound kind of confusing for you guys to hear, but hear me out, okay? So as you guys can clearly see, you guys, the numbers here that I was just talking about, 0, 1, 1, 2, 3, 5, the numbers here are the sum of the previous two numbers, okay? So keep that in mind here with the Fibonacci sequence, all right? Now, guys, to really explain this, we divide each number by the next one and obtain a ratio of 61.8, okay? And when we divide it by, the number two places to the right of that, we obtain a new number of 38.2. And finally, you guys, the next ratio equates to 23.6, which, as you guys can clearly see here, these are the main numbers here of, these are the main ratios that you see here on the Fibonacci indicator, as you guys can clearly see. We've got 23.6 or 0.236. We've got 0.382 or 38.2%. And then we've got 0.618 or 61.8%. So as you guys can clearly see, they're all right here on here as already, you guys. And we'll get into this more when I show you examples on how to use this later as well. So just keep that in mind, all right? This is just me showing you and talking about the ratios and stuff like that. Now, guys, as far as history is concerned, in the 12th century, this dude named, what was his name? I think it was like Leonardo Pisano or something like that. I don't remember the last name, but it was something like that. But anyway, he was better known as Fibonacci. So he noticed that this sequence is widespread across nature pretty much everywhere. I mean, it can literally be found in spiral shapes that form seashells, constellations, flowers, etc., all kinds of different things, you guys. And more importantly here, it's also believed that Fibonacci retracement also affects how humans behave as well. So I know that does probably sound kind of interesting. So guys, the ratios that I was talking about earlier, such as 61.8, 38.2, and 23.6, you guys, they all form horizontal lines between these points, okay? As you guys can clearly see, we've got the horizontal lines between these points, okay? And guys, these crypto Fibonacci lines literally provide price levels where the price is likely to reverse within the trend that it's currently trading in. And they also provide levels where the price is more likely to stall and encounter support and resistance as well. Because a lot of people, you guys, are using these lines for support and resistance levels, which is what, normally what most people are using them for. So guys, now that you actually know a little bit more about Fibonacci retracement, now we're going to actually take a look at how to actually use this in the crypto market here, okay? So guys, how do we actually use this? So to learn how to use the Fibonacci retracement tool, you first need to understand how to read lines provided by the aforementioned Fibonacci crypto ratios that I was talking about earlier, 23.6, 38.2, and 61.8. You see, guys, using Fibonacci retracement is appealing simply because, there really aren't any set of rules on how to properly use Fibonacci retracement. Realistically, you guys, all you really need to do here is you just need to select 2 points, typically a high point and a low point, or any point that seems relevant to you in price, within a price trend, that can be used as a reference. Okay, so as you guys can clearly see here on this trend that I have here opened up on my chart, this is the current Bitcoin chart right now at the time of me filming this video. I'm taking the current high with the current low, okay, and I'm literally just connecting the lines. You can see the line matches up with this bottom line right here, and this line on the top matches right here. So if I were to go ahead and redo this, here I'll go ahead and delete this and redo it. I will select my Fibonacci tool right here, and I will literally go from, if you can see the dotted lines up top, that's where we want the line to be. So it doesn't matter if the points are there or not, it matters if the line is there, okay? So we want the top line, the main line, to be there, all right? Then we will drag it down to the bottom line. Okay, so here is the bottom line, or the bottom of the current trend, which is right in here. So as you can see, we just connected these two. All right. So guys, that's literally all it is. It's literally that simple, you guys. Now, what it really is here, the real thing here is learning how to actually read them, okay, guys? So there's really no best time frame as well. As far as time frames are concerned with Fibonacci, you guys, there's really no best time frame for using this tool either. And guys, this is simply because Fibonacci retracement trading can be used on both short-term and long-term intervals. However, you guys, using it on longer time frames, like the daily chart, weekly chart, hell, even the 4-hour chart works great too. Using it on longer term intervals, it presents more of a stronger trend. Okay, it presents more stronger indicators, I guess you could say, than those that you would find in a shorter time frame. So keep that in mind as well, you guys. So you're going to have more accurate results looking at the daily, 4-hour, and 1-week charts than you are on the 1-hour charts or the 15-minute charts or something like that with Fibonacci. Okay, a lot of people mainly use Fibonacci retracement tools for a lot of people use it for swing trading, to be honest with you. So keep that in mind as well, you guys. So by now you're probably asking yourself, does Fibonacci retracement actually work? So at the gate here, you guys, I'm just going to go ahead out and say it. I'm going to say it's a hard yes, okay? It really is a hard yes, all right? And what's interesting here is that one of the main reasons why it works so well is simply because of its popularity, considering many traders across the globe are literally watching the same exact support and resistance levels, or the same support and resistance line with their own Fibonacci levels, placed at the same places as, hundreds of thousands of other people across the globe as well. So they're all expecting the same results, you guys, which ultimately, culminates, in self-fulfilling predictions. So realistically here, you guys, there's a lot of people that are doing the same thing. So that's why it works so well, you guys. However, you guys, knowing when to actually use Fibonacci retracement is a matter of trading experience, okay? So keep that in mind as well, all right? Don't expect to start using this right away and, start to be profitable with it, the same second you start using it or something like that, okay? It doesn't work that way. Like everything in life, practice makes perfect, okay? However, you guys, knowing when to use it is very, very important, okay? So next I'm going to discuss how to actually trade with Fibonacci retracement, okay? But before we actually do, you guys, I do want to note one more thing here. It is worth noting that the 61.8 or 0.618 ratio is particularly important for trading with Fibonacci retracements, you guys. This level right here, 0.618, okay? Remember this, all right? The 0.618 ratio is called the golden ratio, okay? Now, if you've been hovering around Twitter or you've been watching, other types of videos and stuff like that about trading and stuff like that, I'm pretty darn sure you have probably heard of the golden ratio before. And you guys, traders around the world often consider this level as a major trend support and resistance level, okay? So when the price reaches one of these levels, you know, we can usually expect that either a trend continuation or a reversible or a reversal is going to eventually occur, okay? All right, guys. So now I'm going to actually show you how to read this, okay? So guys, now that you know how to read Fibonacci retracement in a chart, you know, based on the numbers and stuff like that, and how to draw it and where to draw it and stuff like that, now I'm going to show you how to actually trade with Fibonacci retracement. And the best way to trade Fibonacci retracement is simply by observing the retracement levels closely, you guys. You know, you really got to be able to observe the different levels closely and other support and resistance levels that are within these built-in support and resistance levels as well, you guys. So guys, we're going to go ahead and take a look at the current Bitcoin chart right here in its current downtrend. I am on the daily chart, as you guys can clearly see. So guys, to know where to use the actual Fibonacci retracement, you want to choose the highest and lowest points on this trend. So as you guys can clearly see here, I got the high point up here and I've got the low point down here like I was talking about earlier, all right? So guys, if you guys can clearly see this, let me go ahead and move these numbers over to the left a little bit because I don't know, it might be kind of hard for people to see. I don't know. Let me make this a little bigger too so that it's easier for you guys to see and understand what I'm getting at here. So guys, I'm going to show you exactly how I would trade this, okay? Me personally, all right? So again, this all has to do with support and resistance, okay? And again, you guys, bear with me here. You're not going to understand this right away. It might be a little bit confusing, but trust me, once you start to see the trends and you start to see why, and you hear me explaining it more and more, you will start to completely understand and you'll start to see why certain things happen at certain levels, okay? So guys, we can clearly see that up here, it started to, take a giant poop all the way straight down, okay? Now, when this started to, go down further right here where you can clearly see it, so let's say you were right here, okay? Somebody that was right here, if it was trading up here, it starts going down, right? So they would draw this line, okay? Obviously, this line wouldn't have been here yet. So realistically, you guys, you would have held all the way straight down through here. And then when it stops, you see where it closes? It closed right in here, okay? So you can clearly see the next candle closed, or the next candle opened right up next to it, obviously, right? And it dropped even further, okay? Down to this next level of support right here, okay? But it went through support, but it ended up going straight back up, as you guys can clearly see, because it closed above this resistance line of 0.382, okay? So guys, that tells you right there that, it's going to that the price is going to probably start to go, up and down a little bit within these two ranges of this golden ratio of 0.618 and 0.382. Okay, which it clearly did. You can clearly see it here. So throughout this whole time, you guys, throughout here, you can see how many times, 1, 2, 3, 4, the price tried to drop even further. It tried to drop even further and it tried to break this support level, okay? But it never ended up happening, okay? It didn't happen until it reached higher, okay? So once it started to reach higher, you can clearly see that right here, you guys, this one right here, when this candle right here, let me see if I can zoom in on this a little further, just so it's a little more apparent. So as you guys can clearly see here, you guys, when this candle closed right here, and then this candle opened, you can clearly see the wicks. It started way up here, and it just started going straight down right away, okay? This is a perfect example. So throughout the last, week or so, it has not broken down through this support line of 0.382, okay? But on this day, it did end up breaking straight down, and you can clearly see it, you guys. And you can clearly see, instead of this wick opening up above the previous wick, it opened below the previous wick. So you can clearly tell it's going to be a down day. That's typically usually how that works in most cases, okay? So again, as you guys can clearly see, it went down throughout that whole day, you guys. So short traders could have potentially, ended up placing a short up here and they wrote it all the way down. But realistically here, what would happen is you would place a short order right here instead. This is where you would want to place a short order, because if it crosses this line at 0.382, then it's going to keep dropping further, okay? If the next candle opens and it keeps dropping further, that's how it's going to keep going. So as you guys can clearly see, you guys, the next one opened, and it opened underneath this this support line that it broke the previous day. So because that happened, you can tell it's going to keep going down, you guys, because the overall trend is continuing downward, okay? And then the same thing happened again, you guys. We reached the next support level, but we didn't go through it. We ended up closing above it. So that tells you right there, just like the same thing here, you guys, that tells you right there that it's going to probably ride this support line for a while, and it's going to be volatile between this support line for quite a while, you guys, for quite some time, all right? And then right here, you can clearly see the same thing, all right? It tried to go up past, on this last day that it was trading above this support line, it closed right at the support line, and the next day it opened up right on the support line. But instead of going up and continuing the trend or continuing the volatile, straightness or whatever, it instead went straight down towards the last support line, okay? So, or the zero line, okay? And then as you guys can see here, you guys, obviously it did not break this last support line. So realistically, you guys, it kept going up. The candle went up, and then and then it had a reversal right there, and you can clearly see it, you guys. So the next candle started to be green, and it started to go straight up, okay? And you can tell because the wick didn't even go down after that at all. The wick just went straight up, and you can clearly see that because there's no bottom wick here. So once you take a look at that, you guys, you can clearly tell that it's going to probably continue upwards. So realistically, what you would want to do here, you guys, is obviously, you would want to place an order right in here. Your buy order or your long order would go right in here. So realistically, when the next candle opens, you guys, there you go. You're going to ride that next wave straight up, as you guys can clearly see. Or another good place, actually a more safe place to enter in or place a long position would be right on this line right here. So instead of placing my order down here and, because, there's really not much confirmation there to tell you, yes, it's going to go higher or anything like that. So really what you would do is you would plan ahead of time and you would place your buy-in order right at this line at 19,838, okay? Therefore, if it breaks through there, you guys, it's going to keep continuing to go up higher, okay? Because it reversed. So, and typically that's what happens in a reversal. It goes up and it goes up quite a bit. So there you go, you guys. That's simply exactly how I can best describe it, okay? Now I know, trust me, you guys, I know that this might sound extremely, extremely confusing. And trust me, you guys, to me in the very beginning, it was a little confusing to understand as well. And it's still a little bit confusing for me to try to explain it into detail as well. But even I'm getting better at it as time goes on as well. So but basically, you guys, that's the general gist of how to use Fibonacci in trading, okay? You can clearly see, when you look at it candle by candle instead of looking at the big picture, when you look at it one candle at a time, you can really get a sense of what's going to happen, and you can start to get a sense of what's going to happen, okay? So, guys, if you were to buy in like right here, think about that, okay? Or no, actually, let's say right here. If you were to buy in right here and you would have rode it all the way to the top, remember, we're on the daily chart here, so this would be a swing trade, okay? So if you were to do that and buy in right here and go all the way up to here, you guys, that right there, just within that one day, you just made your, let's say you ended up selling out after that, and you were trading futures, and let's say you had maybe 10x leverage there. Guys, you would have made a solid 70% profit. As you guys can clearly see, it's a 7%, but multiply that by 10 because you're using 10x leverage. You would have made a good solid 70% profit on just that one single daily candle, you guys. So overall here, you guys, you can clearly see how you can really benefit from using Fibonacci, okay? And trust me, I'm going to be doing more videos on this stuff and trying to explain it the best that I possibly can. Again, I'm not perfect. Nobody's perfect, but I am doing my best to try to explain this the best I possibly can. So, but if you guys have any questions about this or anything, hey, feel free to reach out to me on Twitter. I already have a lot of people from my channel that reach out to me on Twitter on a regular basis and ask me questions. Trust me, you guys, I was in your position before, and I did not like it that I didn't have anybody to reach out to. So I want to give you guys the opportunity to be able to reach out to me if you guys have any questions about anything like this, because I love helping people. That's what my channel is all about. So if you guys got any questions or anything, feel free to reach out, you guys. Overall here, though, you guys, this is literally just a very crude example on how to use Fibonacci retracements, okay? And you guys, You probably won't quite understand how to use it right away, as I was talking about earlier, but once you start to notice the patterns on the charts and start having a better understanding overall of how support and resistance levels work, everything will start to become much easier over time to understand, you guys. But overall here, you guys, that's going to pretty much do it for this video. So I will go ahead and wrap this one up. But again, guys, hey, before you guys leave, go ahead and make sure to subscribe to the channel so that you never miss a new crypto and altcoin video from me on a regular basis. And hey, guys, with that said, thanks again for watching, and I hope to see you guys in the comment section of my future videos.